Hello everyone, welcome to the latest update of our global outlook here at the Economist Intelligence Unit. My name is John Ferguson, Director of Global Forecasting and Country Analysis, and welcome to 2019. There is so much to talk about, and today I'm joined by two of our best thinkers, Danielle Haralambous, our Country Report Director, but more importantly, for today, our lead UK analyst, and Felix Delbruck, our Country Risk Service Director. Now, before we get to Brexit, which is a major theme here at the EIU at the moment, of course, I want to talk to Felix and get a bit of a story, an update on the global economy. So, Felix, what are some of the major global themes happening in the last month?
Let me just focus on two, the US and oil prices. So we've been saying for some time that we expected 2019 to be the year when the US business cycle starts to peak, when the sugar rush from last year's tax cuts starts to wear off, when the US-China trade war persists and starts to bite, and when consumers start to just hunker down a little bit because of rising interest rates and some of those other factors. So over the past month, of course, financial markets have come round to our view, you could say, with a vengeance.
Yes.
Of course, stock prices have tumbled, investors have moved into treasuries, they've moved into safe haven currencies like the yen. Now, that is very much in line with our view. We think that US growth will slow sharply this year to 2.3% from nearly 3% last year. And if anything, there's further downside to that. So, of course, one thing that's been very much a theme in the US over the past month is the government shutdown. The US has had government shutdowns in the past.
With little impact.
With little impact. So, you've got government workers who get furloughed or put on unpaid leave for a bit. It shows up in the unemployment numbers and they go back to their work. This time around, of course, it's the longest government shutdown in history. We've all seen some of the stories of the hardships that some of those government workers are already facing, and there's a real risk that feeds into spending and confidence in the wider US economy. So that's very much a thing that we're watching right now.
Absolutely. And Felix, what does this mean for the Fed? I mean, probably the most important central bank in the global economy, and we've recently revised our call there, but what does all this mean for the Fed?
Yeah, so the Fed, of course, faces a balancing act. So the labour market is very strong, unemployment at decade lows, wages are finally starting to rise. On that score, this looks like a fairly healthy economy, but there are all these clouds on the horizon.
Absolutely.
So how does the Fed balance that? And we've been saying that they'll strike that balance by raising rates another 2 times in the first half of this year, once this quarter and the second time in June, and then they'll call it a day. And then we'll actually see rate cuts next year as the slowdown deepens.
But because of these risks, I imagine the risk to our forecast is, again, to fewer rate hikes.
That's right, and that risk has probably increased over the last month.
Right.
We've heard less hawkish rhetoric, more cautious rhetoric from the Fed. So we could well see maybe just one extra rate increase, or maybe even none, depending on how bad the data gets. So we're watching and waiting, but it really will depend on the data, how much more we see from the Fed.
Which is really interesting too when we put these things together, because the government shutdown will make it harder for the Fed to interpret the data coming out in the next couple of months.
Absolutely.
They'll have to look through that and make a decision. Was that real, or was that just that temporary impact?
That'll make it very difficult, exactly. So lots of volatility around.
And speaking of volatility, what about oil, the oil market and oil prices? We've seen them tumble, we've seen more volatility there. What's going on in the oil market?
Yeah, so some of that is the kind of slowdown, so global slowdown as well as US slowdown that we've been talking about. But there's also a supply side story there. Yeah. So earlier last year there was a lot of concern around the US's sanctions on Iran and what that would mean for Iran's oil exports. Crucially and unexpectedly in November, the US has issued waivers on Iranian oil exports for some key oil importers.
And that was a surprise to many people.
Yes, and that basically triggered the drop in oil prices. So one key concern around oil supply has now gone for now. Yep. Importantly, it hasn't disappeared. So those waivers expire in May. And the Trump administration, as usual, has been very unclear about what's going to happen next. So there's still that risk on the horizon. There's other geopolitical risks, but for now, it looks as if lower oil prices are the story for 2019.
Absolutely. And before we get to Brexit, I just want to finish, Felix, with emerging markets. What does all this mean for emerging markets in 2019?
So obviously these are some cross-cutting themes. They won't affect all emerging markets equally. You could even think of some that might benefit from this. So let's take a country like Bangladesh. We've identified Bangladesh as one of the potential winners from the US-China trade war as supply chains get diverted. Bangladesh is a big oil importer. Obviously, lower oil prices are good for Bangladesh in that sense. And Bangladesh might also benefit from a less hawkish Fed. But overall, slower global growth.
China's slowing down.
China's slowing down, US slowing down, two major engines of global growth. Overall, it's not great news for emerging markets, and this fits our long-held view that tougher times are ahead for emerging markets as well.
Absolutely. Okay, thank you so much, Felix. Now let me bring Danielle in here. Brexit. Mm-hmm. Goodness, there certainly is a lot going on.
Yeah, it's been a very turbulent few weeks.
Maybe to help people who maybe haven't been reading it daily around the world, like we are, of course, maybe we can just have a bit of a recap of what's been going on recently.
Yeah, so this week we had the meaningful vote on Theresa May's Brexit deal. It was initially scheduled for December, and she pushed the vote back because she didn't expect to win it back then, and she was trying to buy a bit more time to rally support for it. And that vote was earlier this week. It was still kind of widely expected that it would be defeated in Parliament. So this is the Brexit deal comprising of the withdrawal agreement and the political declaration, exactly, with the EU back in November. The margin of defeat, the estimates range from about 100 to 200 MPs, and that was an important detail, what that result would be, because it would tell us kind of how much life was left in the deal. In the end, it was well above expectations. It was kind of 230 MP.
Remarkable.
Yeah, and it was the biggest government defeat, or a defeat for a UK government in history. Really signalling that this is a deal for which Theresa May just can't get the support in Parliament, no matter what kind of concessions she gets from the EU. That are very, very unlikely to be legally binding. They've made that very clear.
Right.
The vote, and what happened shortly after that which was also widely expected, was that Jeremy Corbyn called a vote of no confidence in the government. Now that was again widely expected to actually be to see the government survive, and that happened last night.
Right.
MPs voted along party lines. That Theresa May kind of won that vote, or the government survived the vote, because of the support from the Northern Ireland's Democratic Unionist Party, that really don't want to risk a snap election that potentially installs Jeremy Corbyn. So again, the government survived that, but it's only a short period of relief really for Theresa May, because now there was an amendment to the legislation recently that meant that she has only 3 days to come up with three sitting days in Parliament.
Right, which gets us to the following Monday.
It does, January 21st.
Right.
So we're pre that date.
Right.
That she's only got these 3 sitting days to come up with a plan. She previously would have had 21 days, so the pressure on her has really increased. Her room for political manoeuvre has diminished, and she's in a really tight spot. So at the moment, it looks as though there are some signs that she might still want to try and get a version of her Brexit deal through Parliament. But without additional concessions from the EU, that looks very unlikely. I think that margin of defeat pretty much kills the deal at this stage. Even though the EU is very keen to avoid this no-deal default option, and does want a deal to be achieved. But at the moment, her strategy appears to be kind of trying to seek cross-party consensus for some alternative options. So that could be a Norway-style arrangement. It could be a permanent customs union. The issue with these arrangements that they're also not kind of silver bullets. A permanent customs union means the UK won't have an independent trade policy. The Norway option means free movement of labour, which was a key issue in the Brexit vote, and neither of them solve the Irish border issue.
So we're still back to that problem where it's so hard to see members of different parties coalescing around one view, one solution, one outcome. So it's really difficult to see how this political impasse is broken.
Exactly, which is why we've got this forecast that, given how, given the margin of defeat for Theresa May's deal, and the fact that some of the other options, are kind of, it's difficult to see sufficient parliamentary support for them,
Absolutely.
as you said. We now think that a second referendum is probably the most likely outcome from this political deadlock to try and give popular legitimacy to the next course of action for the
Right.
government. But before that takes place, our baseline forecast, and we changed this forecast very recently, was that, given that Theresa May is unlikely to get this deal through Parliament,
Right.
given that the government does not want a no-deal outcome, we really believe that that is not an option for the government, despite the discussion of contingency planning. And our forecast is that Brexit will have to be delayed. The
So there
government
had to
will
be
have to request this
an
extension
extension to Article 50,
of Article
which we
50.
believe at this time that the EU will agree to.
Yeah, and there have been signals very recently that the EU is willing to agree to that. They've mentioned a kind of window of 3 months,
Right.
which would take us to July. Slightly complicated by the timing of European Parliament elections in May. The UK seats have already been allocated, but they may be a member at this point. But we believe that there will be some kind of fudge around that. Article 50 has been extended, not revoked. So the assumption at that point would be that the UK is still going to leave, and it's not going to be a member during the next parliamentary term. So there will have to be some fudge around that arrangement. But we do now think that Brexit won't happen on March 29th.
And the reason why we think the EU will agree is because it's in no one's interest to have a crisis, a no-deal
Exactly.
Brexit.
This is all. Delaying Brexit is all about ensuring that the no deal outcome is not the default option. Of course, that doesn't completely remove it from the table, because if we have this second referendum, the Brexit options completely widen again.
Right.
The options on the table could be a version of May's deal again, but it could also be no Brexit, and it could be no deal. And so at that point, there's a risk that it is kind of the outcome of a referendum. Very difficult to actually call that at this stage. I mean, I think personally that would be very unlikely. But the outcome of such a referendum would depend heavily on how the options.
Because
options
even though it's
feature.
complicated, what do you have on that?
Yeah, how
on
they're
that,
phrased, how the vote is structured itself, because it could potentially be a three-way outcome. But the point is that no deal risk would persist, even though we're delaying it for 3 months.
Right, absolutely. So continued uncertainty. The businesses we talk to, whether they're sort of leave or remain in their personal views, it's just the uncertainty that's holding people back.
Absolutely.
So yes, we believe now that Article 50 will be extended, but that just means the uncertainty for businesses both here and in the EU just carries on for another few months.
Yeah, I mean, the delaying Brexit, feels as though it's a kind of a bit of a relief because no deal isn't looming. But if it's an option as a result of a second referendum, or even if it's still possible, if we're seeing political deadlock, towards the end of that 3-month extension, for businesses, it really takes away the certainty that was provided to them by that transition arrangement that was negotiated by Theresa May a while back in the end. And the moment the withdrawal agreement was rejected, that transition arrangement was no longer assured.
Right.
And so there was not that kind of 18-month period where businesses, had time to deal with what Brexit would really mean for the future trading relationship.
Yeah.
So, even with this extension of this delay of Brexit, businesses are facing, a period of high economic uncertainty, and we expect that to weigh on the economic growth outlook this year.
Absolutely. And we mentioned the EU before. How are they viewing this? So we said that they will be willing to agree an extension, but given the quite extraordinary events of the last week, how has this been viewed from the EU?
Yeah, the reaction has been mixed in some cases, where you've heard some kind of EU officials say, there's no scope for renegotiation. Others slightly more conciliatory, saying, we don't want no deal. And I think the main overarching message has been, okay, we've spent all this time negotiating a deal. The UK Parliament has rejected it. Your move now. The ball's in your court. We're waiting for Theresa May to come up with her Plan B, and then we can kind of operate accordingly. So all eyes on that kind of Plan B from Theresa May on January 21st.
Absolutely. So just to recap, it's a fast-moving issue, a fast-moving story. We currently believe that Article 50 will be extended, and the most likely sort of outcome of all this is a second referendum, and that's what we'll be looking at and watching very, very closely.
Exactly.
Danielle, thank you so much. Felix, thank you so much. And as always, depending on where you consume your EIU analysis and material, go to our website, and given that things are moving so quickly, please keep in touch with our regional Twitter accounts and the Twitter accounts of our staff here as well. Thank you so much. If you thought 2018 was volatile, I hope you're prepared for 2019. Talk to you soon. Talk to you next month. Thanks for listening.